Hello, wonderful traders. Welcome back to UC Epics. Welcome back to another wonderful video. Yes, this channel is all about helping new and struggling traders to become acquainted with the necessary information and knowledge to be profitable in the forex market. So support us on this wonderful journey by clicking on the red subscribe button and clicking on the bell notification button to be among the first that will see our new videos whenever we upload them. So thanks for doing that, and always remember to drop any topics that you would like us to make videos on in the comment section. We do well to get to you. So without wasting much of your time, let's get into what we have for today. Okay, yeah. What are order blocks? Yes, an order block is a technical analysis technique that tracks the accumulation of orders and distribution of orders of banks and institutional traders. That is, order blocks, also known as OB, are areas where the banks and institutional traders buy and or sell. They are orders in blocks. I take that again. They are areas where the banks and institutional traders buy or sell. So it is required when looking at order blocks, it is required that you first of all look at higher time frames, because institutional traders don't normally scalp the 5 minutes or the 1 minute charts, which is actually what we normally do. So it doesn't mean that order blocks on lower time frames don't work, but the higher time frames order blocks are more effective. So now let's go on the real chart to see what an order block looks like. So yeah, let's start from the higher time frames. So this is USD CHF. So order blocks on the chart are identified as the last bearish or bullish candle before an impulsive move. So for you to say you have an order block, it must be identified by an impulsive move. And we have two types of order blocks. We have the bullish order blocks, and which is marked out as the last bearish candle before an impulsive move upwards. Let me show you that. So if you look very well inside this area, just like I said, a bullish order block is the last bearish candle before an impulsive move. And for you to say that another block has been formed, you need to be marked out or identified with an impulsive move. Right inside this area, we have our last bearish candle as this one here. We have our last bearish candle here. So this is exactly what we call a bullish order block. The last bearish candle before an impulsive move upwards. So you have to mark it from the high of the month. So you have to mark it from the high of the red candle to the lows of the red candle. So this is what we call bullish order block. So and as well we have bearish order blocks, which is marked out as the last bullish candle before an impulsive move of price downwards. So it's typically the opposite of a bullish order block. So I'll be showing you that as well. So if you look well, you will agree with me that we have a nice bullish green candle before an impulsive move. So this is what we would like to identify as our bearish order block. So bearish order blocks are basically the last bullish candle before an impulsive move downwards. So you will be marking that. You take it from the highs. Yeah, so we are going to be taking it from the highs of this bullish green candle down to the lows of this bullish green candle. So here we have our order block. This is what we call a bearish order block. So these are the two types of order block we have in the forex market. So I know you will be asking, what are the reasons behind the formation of these order blocks? What is the explanation behind order blocks? Why do they happen? So I'm going to tell you that right now. So the big institutions and the banks use order blocks to accumulate orders when they want to initiate a bullish trend, and distribute orders when they want to initiate a bearish trend. So, and after this, they often come back in the future to mitigate or tap into the other block before continuing to push price where they want. So you would ask, why do they do this? Yes, they need to come back to mitigate or close opposite orders that they used in manipulating price. Let me explain this on this chart. So here on this chart, just like we identified, this is our bearish order block from the highs of this green candle to the lows of this green candle. So inside this area is our order block. So this green candle is actually our order block. So what's the explanation behind these order blocks? Why do they form? So looking at this area, you would agree with me that we quite price tested this area, tested it again, and tested it again. So some less informed traders will think that this area is going to act as support to push price up higher. So what smart money does is this: they will try to um, buy this market inside this area to manipulate traders or less informed traders to place buy orders. So they will try to induce price. Remember what I said, what I normally say: before a buyer can be able to buy in the market, you need a seller. So they will try to present price, manipulate price to look as if it's going to keep buying. So they will have to do this by adding buys inside this area. So they add up buy inside this area, showing up this green bullish candle, so that less informed traders will think that, oh, this market is going to keep going up. They will start buying up, start buying up. After that, the market goes down. So the smart money now adds a sell. So the smart money now adds a sell to go to their intended direction. Now remember, they added some buys before adding those sells. So they need to come back to close those buys, because those buys are actually on drawdown when this market moved down. So they need to come back to close those buy orders at break even so that they can continue their bearish trend. So I will explain that as well using the bullish order blocks. So let's go on another pair. So let's check on USD CHF. So here on USD CHF, here on the daily time frame. So here on USD CHF on the daily chart, here we have a nice order block. So what's the reason behind the formation of this order block? If you look at this area, you will agree with me that this market was kind of oversold. So we are coming from a point of supply. So price came back trying to reverse to initiate a bullish trend. So what do smart money do? They try to lure or induce sellers or more sellers into the market to think that this market, oh, is going to keep going down, so that they could add their buy orders. So for them to do this, they need to add sells inside this area. So they need to add sells inside this area before to actually induce sellers into this market. So just like I said, before you could buy in the forex market, you need a seller. So they do this by inducing sellers so that they could add the buy orders. So they added some sells here, then added the buy order inside this area, which is as a result of this impulsive move upwards. So later in the future, they came back and tested or mitigated this other block here. So what actually happened? You would agree with me that some less informed traders will actually think that, oh, we have a trend line in this area, that this trend line is going to work. or some breakout traders will think that, oh, this the market is actually going to start moving down from here. So not knowing that this is actually an inducement. So they actually induce, and you could see how price nicely tested this trend line. So inducing sellers or more sellers into this market. So when smart money, after adding those sales to induce sellers, they added their buys as well. So they need to come back in the future to close those sell orders which are inside this area. So they need to close it because those sales are actually in a drawdown. So they came back, closed it at break even, and then continued the uptrend. So as you can see, the uptrend continued. So as you can see, the uptrend continued. So all this thing that happened here is actually liquidity. So if you can understand and see when they're about to happen, you can actually make a lot of money trading them. So not all order blocks actually work. So I have a video for you in the description below that teaches on how to identify valid order blocks with ease and how to trade them for higher win rates. So I'm sure you'll be checking them out after this video. And as well, if you always wanted to learn smart money concepts, I have a compiled video in the description below for you. It has 5 episodes, and I typically organize it from A to Z. Unlike other YouTube videos, you can't easily find a video teaching it orderly. So, and always remember to drop or leave a comment for us on any topics that you would like us to make videos on in the future. So don't forget to subscribe and like, turn on the bell notification button to get notified whenever we upload new videos. In this way, we are actually encouraged to make more videos full of valuable information as this. So thanks, and see you on the next video.